Good morning. This is Dylan Jovine with Behind the Markets. Happy Wednesday. Today is Wednesday, June 25th. Woo. We are almost through the month. We had a killer webinar yesterday. I hope you guys attended. I mean, we had a killer, I think, record attendance or close to record attendance, which is great. And today I want to do what I often do after a webinar is answer some of the questions that we got that we weren't able to answer yesterday on the webinar, because you run out of time. You could just go on and on because you get so many questions. But I just wanted to pull out some of the top ones. Question: are these two companies that we're talking about, these two AI drug discovery companies, back with big pharma? Are they real? And yes, that's a great question, because a lot of folks are saying how realistic, how far down the development pipeline have both of these companies gone? And that's a good question. Is big pharma basically backing these, or are they just little software companies with two kids working out of their mom's basement? And that's obviously a legit question. So one of them, the one that's backed by Nvidia, has partnerships and deals with Bayer, Roche, Genentech, Merck, Santa Fe. So yes, the one backed by Bill Gates has deals with Lilly, Takeda, Novartis, Bristol Myers, and so on. These are way big deals. Question: has an AI drug ever been approved? That's a great question. In 2023, Japanese big pharma giant Takeda spent $2 billion buying a drug that was developed by one of these companies' software. So these guys, we've been into these guys for a while. These are real deal. These are the software platforms that big pharma has used. And it's really interesting. If you look at the evolution of the business model, in the beginning, it was more like these companies developed software and big pharma used it to assist them. And what happened is they started to discover some of these molecules themselves without big pharma and started saying, gosh, we should go bring these through phase 1 and phase 2 and phase 3 clinical trials made with a partner so we can get the massive upside in this. And that's the way. These are really biotech companies. They really put the tech in biotech. These software platforms really just changing how this business is done. An interesting note: it's going to be RFK's mandate, the FDA mandate, might change the industry again back to more software instead of drug development. So you're watching, it's like the Cambrian explosion when life really exploded on Earth. You're watching how this evolves. It's really interesting. The one thing we know is that there's a lot of money and it's been a successful moneymaker so far. Question: is an AI revolutionizing more than just drug discovery in the healthcare field? And the answer to that, another great question. It's revolutionizing a lot, yes. For example, testing for cancer. That's a big deal. Grail, for example, just got approval to have the government pay for early cancer screening tests, which is a big deal. It's also really revolutionizing how patient populations are being managed for healthcare. As a matter of fact, the revolution is really so powerful that we added 4 bonus stocks to this report of testing companies and other things like that. Companies that are putting, again, the tech in biotech. So you're going to get the two that are really poised to revolutionize drug discovery, but you're also going to get all the other stocks, the top stocks that are really killing it. And it's these surprise bonus stocks that we add that people always love. We always want to try to overperform when it comes to these things. And we added, I remember when we did the Golden Dome report, Trump's Iron Dome report and webinar a while back, a few months back, we added the European stocks that were really building up the defense. And those stocks have just done gangbusters. We've heard so much about it. All those military stocks. Military and biotech is just going to be great. It's great, guys. This is a revolution happening, and we have a front row seat because that's what I'm interested in. So it just so happens that the things that I've always been interested in have suddenly gotten super popular. Questions: biotech and healthcare has been in the doldrums lately. Why is now the time to buy? It's a great question. Yes, it's been in the doldrums. Healthcare stocks have underperformed the S&P 500 this year by the largest margin in 25 years. And since the beginning of my career, the first 10 years of my career is the last time it was this underperforming. And that's because, not because healthcare is not an explosion of opportunity, but it's basically because President Trump has been very aggressive since he got into the White House. And RFK Jr., as the head of HHS, Health and Human Services, which controls the FDA, has been very aggressive. What they've been doing is, and this is a two-part thing they've talked about. First, they wanted to knock out a lot of the bad things that happened during COVID, a lot of the groupthink that happened in the government. And stocks are often political. A lot of the investors, they don't really talk about it, but they're political and they just sell things. They sell it and say, you know what, biotech and healthcare is just too hard to figure out. We're just going to sell it until it gets more clarity. And they've sold it. And we've watched it, and our biotech portfolio has gotten hammered as a result, and that's fine. But right now, we're moving from the destruction phase of the Trump administration, where they just knocked out a lot of that groupthink stuff, and now we're moving to the building phase of the Trump administration, where you get to see the kind of offense that RFK Jr. is putting on the field. And this is one of the big things. So this is also an effect of COVID. What they saw was how quickly that COVID vaccine, Operation Warp Speed, under Trump's first administration, how fast it brought a new drug to market using a lot of these tools. And they want to institutionalize this, which is very smart. But look, here's the thing. Now we're starting to see big money start to come back into biotech. And look, here we are in a situation where we have a great revolution happening. There are great bargains in biotech and big money starting to come in. And I like to think, I don't really day trade biotech. I try to keep things in perspective. We launched this service in March of 2018, and the average return on all closed trades over those 7 years has been 47.86%. That's on winners and losers on all closed trades through good years and bad years. It is what it is. So this is a killer service, and we pretty much have a good handle on what we're doing here. Should I buy both of these stocks? And actually, since I've just revealed that there's more stocks in this special report, we made an extra big bonus for you. Should I buy all the stocks, or do you like one more than the other? Look, disclaimer, I can't give anybody personalized financial advice. You have to do what's in your best interest. You should speak to your accountant or financial advisor. But look, if I had $5,000, I'd probably spread them out evenly over these stocks. They're just great. It's a great bet on the future of healthcare. I noticed you've never done a Biotech Insider webinar before. Is your cancellation policy the same as with the other services? Yeah, we've never done a Biotech Insider webinar before because we only started doing webinars again 7 months ago. We haven't had a big enough biotech story. We wanted to wait for the smoke to clear with the Trump administration. But now that we're getting some clarity, now's the time to do it. And of course, we have the same cancellation policy as all of our services, which means you get 30 days to give it a test drive. You get to try it out. If you don't like it, you can get a refund. Just contact customer service, 100% refund. It's a money-back guarantee, 30-day money-back guarantee. And that's our philosophy here. We don't want to take anybody hostage. We're not hostage takers. If you decide after 30 days, which is a reasonable period of time to give somebody a chance, if you decide it just isn't for you, that's fine. We're not children. You do you. That's all good. We really want to share this with people, this kind of cutting-edge research, with people who understand, who are more probably mature and patient investors, and who understand that a 47% average return on all closed trades over the last 7 years, that's something special. It's an extraordinary service. It really is. So anyway, I just wanted to answer some of your questions today after yesterday's killer webinar. I hope you have a wonderful day, and I will speak to you tomorrow.